know that I created a free Telegram group where I share investment theses of stocks that I invest in? Link is pinned at top comment. Hope to see you inside. Do you know, if you bought Palo Alto stocks 6 months ago, you would have made 136% from it, which is why today we will be doing a deep dive analysis on Palo Alto, using the framework that I created. Business model of Palo Alto. Palo Alto Networks provides enterprise cybersecurity through a subscription-based platform. Customers often start with one solution and expand into cloud, endpoint, identity, and security operations, increasing spending over time. This creates recurring revenue, high switching costs, and strong customer retention. The company reinvests its growing free cash flow into AI and innovation, strengthening its platform and driving long-term growth. Next, on financial health and performance. Palo Alto Networks has delivered consistent revenue growth from $5.5 billion 2022 to $10.6 billion TTM, reflecting strong demand and successful customer expansion. Although net profit peaked in 2024 before moderating, the company remained profitable with $843 million TTM earnings. Overall, the results demonstrate a scalable business model with sustained top-line growth and healthy profitability. Palo Alto Networks has consistently increased both operating cash flow and free cash flow, with operating cash flow growing from $2.0 billion to $4.2 billion TTM, and free cash flow from $1.8 billion to $3.8 billion over the same period. This reflects a highly cash-generative business with strong recurring revenue, efficient operations, and the financial flexibility to reinvest in innovation and long-term growth. Accounts receivable increased from $2.1 billion to $3.0 billion, alongside revenue growth from $5.5 billion to $9.2 billion. As receivables have grown proportionally with revenue rather than significantly outpacing it, this suggests healthy collections and customer payment behavior, supporting the company's strong cash generation and financial quality. Next, on financial ratios. ROE 6.93% and ROIC 2.24% are below ideal levels, largely due to lower net income and increased invested capital from acquisitions and growth investments. However, the company's debt-to-EBITDA of 0.08 reflects a very strong balance sheet with minimal leverage. While the current ratio of 0.86 is below 1, this is common for subscription-based software companies due to deferred revenue from upfront customer payments. Next, on market share. Palo Alto Networks is the global leader in the network security market with approximately 28.4% market share, ahead of Fortinet, Cisco, and Check Point. Beyond firewalls, it has expanded into cloud security, endpoint protection, identity security, and AI-driven security operations. This diversified platform strengthens its competitive moat, supports cross-selling opportunities, and drives long-term recurring revenue growth. Next, on clients of Palo Alto. Palo Alto Networks serves over 70,000 organizations across 150-plus countries, including 85% of the Fortune 500. Its customers span financial services, healthcare, government, manufacturing, retail, technology, and education. This diversified enterprise customer base supports recurring subscription revenue, high retention, and significant cross-selling opportunities across its integrated cybersecurity platform. Next, on the moat of company. Palo Alto Networks possesses a wide economic moat, driven by its integrated cybersecurity platform, high switching costs, strong enterprise relationships, and continuous AI-driven innovation. Its leadership in network security, large global customer base, and recurring subscription revenue create durable competitive advantages, while ongoing product expansion and cross-selling strengthen customer retention and support sustainable long-term growth. Next, on intrinsic value. Based on the DCF model, Palo Alto Networks has an estimated intrinsic value of $176.24 per share versus a current market price of $365.60, implying the stock is trading at a 107.45% premium. This suggests the market is pricing in strong future growth, making the stock appear overvalued under the current assumptions used in the valuation model. What about the comparison with competitors? Compared with Fortinet and Cisco, Palo Alto generates lower revenue and net income than Cisco, but leads Fortinet in revenue. Its ROE and ROIC trail both peers, while its high PE ratio reflects investors' expectations for stronger future growth rather than current profitability. Despite premium valuation, Palo Alto benefits from a leading cybersecurity platform, recurring revenue, and strong long-term growth prospects. Next, on stock performance. Palo Alto Networks has consistently outperformed Fortinet and Cisco across the 1-year, 5-year, and since IPO periods. Strong returns reflect sustained revenue growth, expanding recurring revenue, AI-driven innovation, and market leadership in cybersecurity. While the stock has delivered exceptional long-term performance, investors should balance its strong fundamentals against its premium valuation. So what is the support levels to add? Palo Alto Networks remains in a strong long-term uptrend, consistently making higher highs and higher lows. After breaking above key resistance at 307.67, the stock is now trading near all-time highs around 366. Previous resistance levels at 307.67, 259.79, and 223.16 may now act as support. Momentum remains bullish, although a short-term pullback or consolidation is possible after the recent rally. Next, on acquisitions. Palo Alto Networks has strengthened its cybersecurity platform through acquisitions, including CyberArk, Identity Security, Portkey, AI Gateway, Koi, AI Endpoint Security, Chronosphere, Observability, and Embrace, Real User Monitoring. These acquisitions enhance AI security, expand platform capabilities, and support the company's long-term platformization strategy. Lastly, what are the catalysts and risk of company? Key growth catalysts include accelerating AI security adoption, continued platformization and cross-selling, and expanding recurring subscription revenue. Key risks include its premium valuation, intense competition from Microsoft, CrowdStrike, Fortinet, and Cisco, and slower enterprise IT spending, which could reduce cybersecurity budgets and moderate future growth. So, did I invest in it? Yes, I did. So, my thesis was, AI is making cyber threats more advanced, increasing the need for stronger cybersecurity. Palo Alto is the Ferrari of cybersecurity, and it checks all my investment criteria, which is why I invested. Link is in description and comment section. Let me know what content you would like to see next, too.